Welcome to the SWIB Podcast, where members of the Wisconsin retirement system can turn for timely information on the investments that help fund the state's pension system. I'm Chris Preisler, Communications Specialist for the State of Wisconsin Investment Board, or SWIB.
And I'm Dusty Weiss, producer of the podcast.
The financial markets in 2024 were shaped by geopolitical conflicts, a presidential election, the Federal Reserve starting an interest rate cutting cycle, a continued bull stock market, and a U.S. economy that remained relatively strong. Many of the themes that dominated the past year are likely to continue shaping the financial markets in the year ahead. What does it all mean for SWIB and the Wisconsin retirement system? Today, we welcome back to the podcast SWIB Executive Director and Chief Investment Officer Edwin Denson. We'll talk to Edwin about some of the things that impacted the financial markets in 2024, the performance of the WRS trust funds, and what we might expect in the year ahead.
The SWIB Podcast is a regular opportunity for you to learn more about the people and funds that comprise the Wisconsin retirement system. Please make sure you subscribe in your favorite podcast app so you don't miss an episode. Share this episode with your fellow WRS members, and leave a review on Apple Podcasts so it's easier for other members to find this show.
Edwin, Happy New Year and welcome back to the SWIB Podcast.
Well, thanks for having me, Chris and Dusty, and Happy New Year to you and all our listeners.
Great to catch up with you again, Edwin. Always love this time of year because we get to take a look back at the past year and see how things turned out and take a look ahead. But why don't we start our discussion by taking a look back at 2024 then? As mentioned in the opening, there was a lot going on in 2024. Investors certainly stayed on their toes. Geopolitical risks continued to weigh on investor sentiment. But we also watched as the talk of a recession kind of faded into background noise, mainly because the stock market and U.S. economy in general stayed really strong. And of course, the Federal Reserve started implementing its plan for cutting interest rates. But maybe the biggest headline for WRS participants was that the pensions trust funds performed very well. Can you give us a recap of where the trust funds finished in 24?
Yes, absolutely. I would like to start by reminding everyone out there that we have a long-term return target of 6.8%, and that's the rate of return that we need to deliver over the long term to keep the WRS fully funded, to keep contribution rates stable, and to provide for modest upward annuity adjustments through time. And we like to compare ourselves to that standard. The core trust fund, which is the larger of the two WRS trust funds with $120 billion in assets as of the end of 2024, ended the year with a preliminary one-year net of all-cost return of 8.5% and a preliminary 5-year net return of 7.2%. On a longer-term basis, the core fund's 10 and 20-year returns, net of external manager fees, continue to exceed that return target of 6.8%, with SWIB outperforming the core fund benchmark for all of these periods. Just for comparison, again, to put that 8.5 that we delivered in context, the S&P did return 24% in 2024, and the Bloomberg U.S. Government Credit Index returned just over 1%. The variable fund, an optional stock-only fund with more than $11 billion in assets as of the end of 2024, ended the year with a preliminary one-year net return of 18.7% and a preliminary 5-year net return of 10.9%. On a longer-term basis, the variable fund's 10 and 20-year returns net of external manager fees were 10.4% and 8.7% respectively.
Well, that really is great news, Edwin. And it's really even better news for WRS participants, like we said, right?
Yeah, again, yes, absolutely. Strong absolute investment returns in 4 of the past 5 years are expected to result in a positive annuity adjustment for beneficiaries and stable employee and employer contribution rates, which is good news. Department of Employee Trust Funds will soon provide estimated ranges for annuity adjustments for both the core trust fund and the variable trust fund, and announce the actual adjustments in March. Investment performance also affects contribution rates, and those rates for 2025 will be set in June.
So we should point out that WRS retirees have seen positive annuity adjustments each year since 2013, with the only exception being 2018, when there was no adjustment. And for active employees over the last 10 years, contribution rates have hovered between 6.5 and 6.9%. So again, that just shows the investment strategy SWIB has implemented continues to weather the various market conditions we've experienced in recent years.
Yes, Chris, we're incredibly fortunate to be part of a pension system with both a planned structure and an investment strategy that are designed to weather financial storms and help provide participants with the retirement security that they deserve. The WRS is built on stability, long-term growth, and a commitment to the participants. Not every public pension plan is able to say the same thing. My sister is a teacher in the Chicago public schools and has been there for an entire career. I've seen firsthand how hard she works to educate and inspire her students. And like so many of the participants in the WRS, no matter what role they play in the public sector, she dedicates herself to a public service career, one that requires patience, passion, and a deep sense of responsibility. Unfortunately, her public pension is woefully underfunded. That is something that is not unique to Chicago. Many public pension plans across the country are underfunded. Those public pensions can take several different approaches to the underfunding, one of which is taking a riskier investment approach to reach for returns, which means they're more exposed to the unpredictable fluctuations of the financial markets and the whims of economic cycles. Other options include tapping into tax revenue or general revenue or raising contribution rates for employers and or employees. The participants in those plans have to keep their fingers crossed that the promises made today can be kept tomorrow. Here in Wisconsin, thanks to prudent stewardship, a sound investment strategy, and strong governance, the WRS remains well-funded and positioned for the long term.
So sometimes, Edwin, pension funds get compared to a passive portfolio of 60% stocks and 40% bonds. Why is that a common metric, and how does the core fund compare to that type of approach?
Well, passive 60-40 is something you hear from wealth managers that is a good rule of thumb for lay investors. You get some diversification because you have stocks and bonds, and you can implement it at a very low cost. It also acknowledges that most people won't beat the market over time. But at SWIB, we have staff with the knowledge and expertise to implement a more sophisticated and complex approach that takes advantage of more asset classes, as well as the use of active management where it makes sense. Over the last 20 years, SWIB's active management and diversification have generated over $15 billion for the core trust fund above and beyond the returns of that passive 60-40 portfolio. Further, our investment management has added value to the WRS trust funds of more than $4 billion over benchmark returns over the 5 years ending at the end of 2024.
Well, Edwin, anytime that you can beat that benchmark, it's certainly good news for WRS participants. But let's take a look under the hood here, go back to the year-end returns and talk about the various asset classes and how they performed. Even if you just casually watched the headlines last year, you know that the stock market performed very well throughout the year. Can you talk a little bit about that, but also fill in some of the blanks as far as how the other asset classes performed in 2024?
Well, indeed, Dusty, public equity did very well in 2024, up about 17.4% for the year, whereas public fixed income was up a much more modest 3.8%, and Treasury inflation protected securities an even more modest 1.8%. Private equity debt ended up in the middle of that range, returning about 7.5% for the year. And then the real drag from an overall asset class perspective was real estate, which was down 8% for the year. Now, that 8% decline was for the benchmark or for the market as a whole. Our actual real estate holdings only fell about 3.25%. So our real estate team actually had us positioned very well for this downdraft in the real estate market, outperforming that broader benchmark by almost 5%.
We talked about how well SWIB's investment strategy performed through the volatility the markets have experienced. That strategy starts with SWIB's asset allocation. You're implementing just a small change in how things are allocated for 2025, right?
That's correct. In December, the SWIB Board of Trustees approved the 2025 asset allocation targets for the core trust fund. The 2025 asset allocation reduces public equity from 40% to 38%, and increases private equity debt from 18% to 20%. The board approved the changes based on a recommendation from staff and SWIB's asset allocation consultant, NEPC. Private equity and private debt instruments contribute to portfolio diversification and also provide access to opportunities not available in the public markets.
So I know that private equity doesn't always garner favorable headlines, which causes concern for some people. But for public pensions like the WRS, as you said, exposure to private equity investments is part of a well-diversified asset allocation. Can you talk about some of the other benefits of private equity investments?
Of course. As you said, diversification is a fundamental principle in investment management. It spreads risk across various asset classes, thereby reducing the impact of any single underperforming investment. In addition to helping diversify the WRS trust funds, private equity has the potential for higher returns than traditional asset classes over the long term. It also provides more investment opportunities since a majority of U.S. companies are private. The universe is sizable as more than 85% of U.S. companies with over $100 billion in revenue are privately held, representing a large share of employment and production that are not captured by listed stocks. Just for context, in 1996, there were over 7,000 public companies across all U.S. exchanges. Today, we're down to around 4,000.
So as an asset class, how has private equity debt performed for the WRS?
Well, it's done really well for us, Chris. For SWIB, private equity debt has been the strongest performing asset class over the most recent 5 and 10-year periods, returning 15% over the 5-year period and 13% per annum over the 10-year period. That compares favorably to public equity, which has returned just a little over 10% on a 5-year basis and under 10% over the 10-year period. In addition, SWIB's private equity allocation has outperformed its benchmarks over all time periods, demonstrating the skill staff has in selecting high-performing fund managers. These investments often involve smaller, faster-growing businesses that can offer higher returns than public markets. SWIB's investment in private equity and private debt has supported the overall WRS investment strategy and provided solid returns for the core trust fund.
So it seems like with the slight increase in allocation, you must be feeling pretty bullish that private equity and debt is going to continue to generate solid returns going forward.
Well, absolutely. We've been a little underweight private equity and debt relative to our peers, but because of our fully funded status, we can afford to tilt a little bit more into it and have more of our capital locked up in less liquid vehicles. And in general, the higher returns to private equity and debt reflect a so-called illiquidity premium. And then one last point to make is, and you had referenced it, Dusty, too, is public equities did very, very well in 2024, returning about 17%. So there is some catch-up for a private equity to do, and we fully expect to realize that over the coming years.
So another question that participants might have is, how are you changing your investment strategy, if at all, following the election and with a new administration coming in?
Well, basically, we're not changing our overall long-term strategy. Individual strategies that we manage may see ways that the incoming administration will be beneficial or detrimental to certain companies or sectors and make investments accordingly. But we're long-term investors who invest for all types of market environments. Like with any administration, we'll watch carefully how the policies enacted impact things like growth, inflation, and interest rates to inform our future positioning.
Now, I know you don't have a crystal ball that can accurately predict the future, but what are some of the things that you think we can expect in 2025?
Well, at the outset, there's definitely going to be volatility because the incoming administration has a pretty set direction on many issues, including taxes, energy policy, trade policy, and immigration. So the direction is certain, but the actual magnitude and form is not. For example, on Inauguration Day, the market reacted when the incoming administration did not mention Canada and Mexico in terms of tariffs. And then a couple of hours later, when they were mentioned, the markets moved the other way. So again, that's just a sign of the volatility to come as the market tries to ascertain, again, the exact magnitude and form of those major policy initiatives.
So Edwin, with all the headlines and things that change so quickly on a daily, sometimes hourly basis, how do you and your staff keep tabs on everything to make sure that the WRS remains well positioned?
Well, there are times, Chris, where it is a challenge because things are changing so quickly. However, we've got the resources, both internal and through our external partners, to really keep up with what's going on. On staff, we have many economists and strategists and the like that are in constant contact with the market, and also, again, through our external partners. And it's really just a lot of great communication and collaboration across the agency that really helps us keep abreast of, again, an ever-changing and fluid and sometimes very quickly moving market.
And that's really an example, isn't it, of where active management can make a difference over a passive investment strategy, right?
Well, absolutely. And identifying those shifting sands in terms of policy, economic cycles, other things that can affect the market is actually very important in terms of informing the decisions being made by those who are facing off with the market every day.
I think you're right, Edwin. I think for a few weeks here, there's going to be a lot of tea leaf reading. And certainly we say this every year in January, but it sounds like things are going to be very interesting in the coming year. But let's change gears a little bit and talk about some news from SWIB. I know that you have got to be just bursting at the buttons right now because of some of the recognition that SWIB staff received over the past year.
Oh, you're right, Dusty. I couldn't be prouder of the staff at SWIB. We had several recognitions in 2024 that really emphasized the innovative and collaborative work staff is doing. First, our Funds Alpha team won Institutional Investors Allocators Choice Award for 2024 Hedge Fund Allocator of the Year. The 8-member Funds Alpha team was nominated for growing our hedge fund portfolio through exceptional performance, innovation, and strategic vision, and also positioning themselves as leaders in the hedge fund industry. In addition, SWIB's Private Markets and Funds Alpha Chief Investment Officer, Anne-Marie Fink, has been selected as one of 60 women on this year's Pensions and Investments Influential Women in Institutional Investing list. The list is made up of women nominated by colleagues and industry advocates for their contributions and potential. SWIB Senior Portfolio Manager Chase Nicholson has been selected for a pair of industry awards, Institutional Investors 2024 Rising Stars, and Chief Investment Officers Class of 2024 Next Gens. The Institutional Investors 2024 Rising Stars includes 10 asset managers who are on track to become leaders within the industry. Next Gen members are allocators who, quote, stand to become chief investment officers themselves someday and are known for their virtuous mixture of financial knowledge, interpersonal skills, and forward thinking. Chase was nominated for his use of academic research and technical expertise to identify innovative and effective investment strategies, using out-of-the-box thinking to set him apart as a true innovator. Again, I couldn't be prouder of these honors and really all the staff here at SWIB because it takes a great team from top to bottom for us to be recognized for these types of awards.
Certainly, congratulations to you and the staff at SWIB. I know we usually find a reason to say it every year here, Edwin, but it's a remarkable organization filled with remarkable people and really sets the standard for the industry. Well-deserved recognitions all the way around. So, Edwin, as we wrap up our discussion for the day, what do you want WRS participants to remember as we start this journey through the new year here?
Well, I do think about this a lot, Dusty. And as I think about it, my message really doesn't change much from year to year. Participants should know that I'm confident no matter what comes in the days, weeks, and months ahead, the WRS is well positioned to continue to meet its obligations and remain fully funded. Our mission is to grow and protect the participants' benefits and ensure they have peace of mind to focus on their work, life, and future. And that is why, as we head into the new year, we remain committed to continuously improving and evolving to ensure we remain one of the most resilient pension funds in the country. I also want to extend my gratitude to the participants for their dedication to public service and for entrusting us with their retirement futures. It's an honor to serve them.
Edwin, thanks for taking some time today to look back at 2024 and look forward to 2025 and to discuss some of the innovative ways SWIB is working to remain an investment management leader. It was a great discussion as always. Thank you again for joining us on the podcast. And thank you to all our listeners for checking out this episode of the SWIB Podcast.
The SWIB Podcast is brought to you by the State of Wisconsin Investment Board and produced by PodCamp Media. Branded podcast production for businesses, podcampmedia.com. Our editor for this episode is Matt Covarrubias.
Thanks again for listening. I'm Chris Preisler.
And I'm Dusty Weiss.